radical. I keep asking anybody at the Fed or outside of the Fed to explain to me what problem this is solving. I can send anybody in this room $5 with Venmo right now. Right? No, seriously. So what is it that a CBDC could do that Venmo can't do? And all I get is a bunch of hand waving. I get a bunch, well, maybe it's better for financial inclusion. Maybe it's better for cross-border remittances. Maybe. Is there any evidence that it is? And they say, well, what about China? China is doing it. Well, I can see why China would do it. If they want to monitor every one of your transactions, you could do that with the central bank digital currency. You can't do that with Venmo. If you want to impose negative interest rates, you could do that with the central bank digital currency. You can't do that with Venmo. And if you want to directly tax customer accounts, you could do that with the central bank digital currency. You can't do that with Venmo. So I get why China would be interested. Why would the American people be for that?
So what's going on, ladies and gentlemen? Mainly doing this video for people that I know and, friends, family, etc. And we're going to start to wrap up this financial sharing of information. We're getting very close to the point of where I started this online stuff, the Trader E9, the online videos, the sharing of charts, etc., because I wanted to maybe help. I wanted to give the detail and dissect the information and share, discuss, research, but I think people are more fed up, confused, bewildered, and they just don't know what they're looking at. And I didn't at one stage, and the level of pessimism and fear and just mental grey areas. It's hard for people, and I anticipated something like I anticipated these things happening. People were just head in the sand, waiting for things to get back to normal. But at the end of the day, I knew something worse was coming. I said to people, something worse is coming. It may not happen right away, but it's going to happen. And look at what's happening. People can't afford to heat their homes or eat. So, a lot of people tell me they're going to buy Bitcoin, over the past year. And I said, be careful. And, I didn't want to say yes, I didn't want to say no, because at the end of the day, I have a specific strategy and I employ it. I buy Bitcoin, dollar cost average. But the thing is, I dollar cost average on a down move. I don't dollar cost average if it peaks up. And it's very difficult because, the majority of the people hear about Bitcoin when it's up at this top area. And that's the reason being. So when it's moving down like so, then, in your head, you're not going to do it because you think it's a bad move. But this is how you have to do it in order to make it work. So just going to go over a few different key performance indicators that I keep an eye on and that we've talked about over the past couple of years. A lot of people talking about these indicators, and when I show you them, you're going to see why. So at the moment, Bitcoin is trapped between these different levels. Okay, and I call them levels. We'll just call them price levels. And it's important to understand what happened in the past at these particular levels and what's happened after. Okay, so the first one is going to be just a simple 200-week moving average, which a lot of long-term investors use. And you can see by the green line here that it's very rare that Bitcoin moves below it, and when it does, they are buying. So you can see here back in 2014, dip below, 2011, dip below, 2019, dip below. Okay, and we've got one in 2022. Now you have to understand about what brought the price below these levels. Now I don't know. I don't have the information to hand, but what I can say is that it doesn't spend very long below this level, and then it's turning around. So what we've got on the horizon is a very gloomy outlook, inflation, energy crisis, cost of living, etc. And we're below this. So I'm expecting this to pivot back to the upside. Okay, so the next one will be the Bitcoin investor cost basis, and that's at 19,400. And you can see this is doesn't like being below this level either. So you can see just here back in 2018, right at the bottom of the bear market, I think it was around 3.5k here, boom, back to the upside. Back in 2014, and now once again dip below it and we're back above. So that's 19,400. I've got these marked on the charts. We'll go through them in a moment. It's a good way approach to market, and you can see that the long-term holders selling to the strength. Okay, and this is how really people should trade. As the liquidity comes in, as the volume comes in, you sell into the volume, and get yourself out, because this is just the way to do it. And this is how I trade. It's almost like how a day trade is. As the move that I'm looking for comes up, I start to scale out. So as you can see, this long-term holder basis, we'll start from back here, but as the price starts to sweep up, long-term holders decrease. In other words, long-term holders are selling what they have. As price moves down just here, it turns back to the upside. Again, blue price shoots up. Long-term holder supply moves down. Blue down, green up. Blue up, green down. Okay, so at the moment we are leveled out here, but what we have done is we have accumulated. Okay, they have accumulated on this on these previous all-time highs. So we've accumulated, and they've sold out a bit, but we're holding. So looking at the chart, you can see these levels I've got on here is the black level, previous all-time high, which is this peak back here. You can see the white level, the 19,400 investor cost basis, and the line, this blue line here, which is a 200 moving A, 200 moving average. So you can see we're leveled out. So a couple of more things that I wanted to just talk about. Just don't get me wrong. This is a time to be buying. There's no I'm in an ahhing about it. This is the time for the long term. So whether it be a small purchase per week, moving forward, maybe for the next 12 to 16 weeks, we can see that start to average out and move back up. So I don't know, maybe $100 a week, $250 a week, get that stacked up and start to move forward. So I'm going to start to cash in some assets and physical assets, and start to accumulate, and let's get this averaged out, and we'll come back in a year's time and see what's happening. So another chart that I want to look at, which is very similar, is the Bitcoin oil chart. Okay, and you can see this is really crazy. I mean, we're talking about oil. Now, oil is the energy driver. This is what the energy problem is all about, the oil price. And with the modern day usage, this is the commodity that you want to be looking at, not dollars. Okay, oil. So my point is that this is the Bitcoin price compared to oil. And I just want to talk about this channel because it's very obvious about what's happening here. And we've got the Overwatch down at the bottom, and I've just plotted these circles. Okay, so we'll talk about that first. Peak are the white circles. Okay, peak on the channel and the trough on the channel, you can see it's a zigzag. I've got the peaks drawn onto the bottom pane here. You can see this RSI, which signifies a peak. And for anybody that isn't technically savvy and understand pretty much what's on the screen here, don't worry, I'm going to go through it briefly, just translate for you. When this bottom one is peaking up, okay, above these dash lines, it means it's overbought. It means the strength is looking to move to the downside, and it doesn't mean it will, but it's just an indicator. And the same with the bottom. So my point is that I've just located the peak. We've labelled that, and then what I've done is I've drawn a dash line down to where it's broken. Okay, you can see these two dash lines, and then another one for the bottom, and this is known as a wedge. Okay, it's a falling wedge, and when that's broken to the upside, okay, you can see the wedge is broken, and what comes after that is a move to the upside. Okay, so translating this to the upper pane, you can see the white dot, and if you trace that down, you can see it's just under the underside of the wedge here. Okay, and then it's broken up. So moving to this middle pane, this is something I use on these charts. When it breaks this black line to the upside, you can see this green dot, and I've just put a green dot on the chart here to signify the location, and you can see what's come in. Okay, move to the upside. So move into a more, modern time, move into more present time. What's happened? Okay, we've had the peak, we've got the line drawn down. Okay, we've got the wedge located, and we've broken to the upside. Look, okay, we've had a touch on the bottom of this channel, okay, and then we've broken up. So pretty much what we're waiting for. So what happened here is if I just number this, first thing, bottom of the channel is located, wedge broken on this bottom pane. So have we had that happen now? We've had the bottom of the channel touched. We've moved into the oversold position. The wedge has broken. Now what happens from there is this is to cross to the upside, and you see this move come in. What's happening? We've touched it, we've moved back down, and we are literally on the button on that line. So if we start to move up from this exact point, like this point here, this is going to go green. Now let's just measure some of these moves from when they turn green. Okay, we've got one here. If we go up to the red spot there, 140%. Okay, amazing. So we'll measure it from the point where it switches back to the upside again. To the downside, 110%. I'm not even calculating the peaks. So if I was to take into account the actual peak there, 369%, we're talking about 369%, 3x, well, nearly 4x. Amazing. Okay, so let's just say we're following the Overwatch crosses here. We've crossed back to the upside once again, all the way to the point where we cross back down, and another 192%. So my point is, you caught this at the bottom. We're following this Overwatch on the weekly, 141%, 116, 192. Big gains. We did have a couple of little cheeky terrors just here. They did come up and go back down and come up, go back down. And this is why I've got these this new indicator I've programmed with the color codes, so you can really see this. Okay, so we can see this has broke to the downside. We are red. We're coming back up to retest that, and we've broken up again, and we haven't broken that. So really, we're going to have minimal entries at this point, and we've sold out and pretty much kept what we've got going and moved to the downside. But if we do catch this move up back to the bottom, we can use this Overwatch indicator and just clarify that. So we're talking about a move back up to the upside of this channel, if we can get that, and we're talking about 600% serious stuff. So that's pretty much what I got for today. I don't think I'm going to be making any more videos moving forward. We're pretty much done with this type of stuff now. I just wanted to just make this final video. So, I'm not saying at this particular second, this moment, as soon as you put down this video, go and spend all your money and just put everything you got. This is done over a section of weeks. And, pretty much as soon as this breaks to the upside, we're going to be green, and that's when we're looking. So the price, currently at this particular moment is 19,620. So we're close to that investor cost basis level. So in your head you can keep your eye on that level and move from there. So with that being said, guys, wish you all the best. Man.